Okay, I think this is just a little of what you want yesterday. So you're going to learn more today, right?
This one.
If surgery itself. Then I still want to remind you guys about the January class. Okay, some of us have started paying. So I want to make a payment. You can as well do that. The first stage of the class is the training. It's 50,000 there. That's for 2 months. Then the full package is will last for 3 months. That one is 110,000, right? But if you pay once, you pay 95,000 there, right? So we actually, you have to book your space now because you have a limited space. When you book space here, okay? When you book your space, you know how to arrange the timetable.
When it comes,
So that by the next day, January, as we're coming, we're just starting.
YouTube is working.
So let me stay informed with that. Once again, you're welcome to CitiForex Day to enjoy our workshop. Right? Okay, before we start, someone should commit today to the next.
Don't forget it.
In Jesus' name.
Amen.
My and everlasting Father, we thank you for bringing us together once again. Let me pray. Father Almighty, thank you. I will together on this today and give you we pray. As we open our prayer, we'll see whatever the teacher will teach us about. We pray that to make him more resourceful, Almighty Father, so that we shall gain the word in Jesus' name. Amen. All that progress emanating us to help us to do the work well in Jesus' name. Amen. Thank you, Father, in Jesus' name.
Amen. Okay, now let's welcome the surgeon to continue.
Alright guys, good morning guys. Thank you for the clap. Okay. Just so I don't forget, along the line, if you have any personal hinges while we are, because today is the last day and I want us to finish everything. So if you have any side, anything that is stopping you from doing with us, you can call his attention so that he will show you. Okay. So that we can finish off. Okay. How many were able to trade yesterday? I saw some persons that made money. Did you trade go or you lost? Did you make money or you lost? You made money. You made money, but you can't withdraw it. Okay, 2. What did you go well? Okay, and then that means you made 800. That's the idea. So that's what we're talking about, 60-40. It works most of the time. Yeah, and then once in a while it might not work, but you don't get to lose much. So if you follow it like that, you make money eventually. It's a simple way of trading. Anything outside what I said or what I showed you is not trading anymore. It's something else. So what we are now going to be doing is we compound on it. I've given you bread of heaven, or bread from heaven. It is now left for you to go and look for another system that you are convenient with. Some of you might not like the idea of the crossing and MACD. So you use anything that works well for you. That's the idea. You see. So, but I want to emphasize that it's not about these setups. It's not about the strategy. It's about the management of your money. That is the main thing. That's why we're here till today. We manage money. It's very important.
Emotional.
Yes, managing money saves you a lot. If you can deal with if you don't manage money, you get into trouble. and you start to deal with emotions. So, but if you deal with the root of the problem, which is money management, you solve. See, there are three things: strategy, and I've given you one strategy already. Makes up 10%. The next is money management, makes up 30%. I mean, for you to be successful, makes up 30%. And we have decided, okay, let's use 2% per trade and max of 6% open trades. Is that okay? That takes care of the 30%. It takes care of the 30%. Then the last part is what? Trade psychology, right? Your mind wanting to be perfect, wanting to be certain all the time. And then what takes care of that? The single antidote is thinking in probability. If you know in your mind that this is technical analysis, you know that is not guaranteed. And when you trade with that mindset that every trade, the outcome of every single trade is not guaranteed, you have taken care of the 60%. You get the point now? That gives you 100%. Even if you have a perfect trading strategy, you only have 10%. So even if you have 100%, you can't even have 100% win rate. There's nothing that you can do in the market. Like, let me tell you why. When you take a strategy, it's easy to find yourself in a winning trade. You can just buy now and it's going up and you are in a winning trade. Okay? But a strategy is one that has both entry and exit. And you need to design your strategy in such a way that you know before you enter where you want to exit. So if your strategy is not designed in such a way that you know your exit, you're going to end up leaving money on the table all the time. What I mean by that is you'll be making a profit of maybe 300 naira, 400 naira, 500 naira, 6. You can make up to 1,000 naira profits when you open to 200 naira, but you end up not taking anything because you keep on. Greed now makes you feel like, okay, it will keep going and to keep going, and we know the market doesn't move up forever and it doesn't move down forever. Okay, so these three angles are the three things you need to take care of. Everything, how to buy or how to sell or how to place trade, is primary, is secondary. What I mean is it's not difficult, it's not important. In the next couple of days, as you start to play with that MT4, you figure out everything, just like opening a new maybe Android game, or you just get used to it. You know how to operate it. So that part is not difficult. Even the part of the calculation, you get used to it. It's not difficult. The main thing is don't start and be looking for a strategy that, when I've introduced you to indicators, when you go now, you start seeing some indicators that might interest you. Before you know, you fill up your chart with indicator in an attempt to perfect your strategy. It never works. It never works. I know what I'm telling you now. It never works because it happens over and over and over. I have helped a lot of traders to become very, very profitable. People who have traded for years, even people who have started trading before me, I have shown them the right way to trade. See, the bridge from being an amateur and a professional is very simple. It's just thinking in probability. A professional knows that no outcome is guaranteed. So what he does is he manages his risk. A trader, the definition of a trader is a risk manager. That is a simple definition. As a trader, you are a risk manager. Right? And then when you manage your risk, profit shows up. If you think, okay, in terms of electronics, and now let's go to the normal market. Those that sell, that do a trade, what they are doing every day is to manage risk. And then they hope to make a profit. If I have goods in my store, the primary thing in my head is how to protect my goods. Is it not? You don't want to lose those goods. So that if somebody walks into your store, he will see something to buy. Is it not?
Yeah.
Yes. Your account, your capital in your account are microchips that you used to play. See it that way. They are microchips. It's like out of that money in your account, you keep on bringing out a little. Yes, you just keep bringing it out little by little. Yes, to take more. And I want to tell you the truth. If you risk little, you will make more money. But if you risk a lot, you will lose a lot. It is the reality. This reality is easier for those that have lost a lot of money to understand. You know, I met somebody that said, just tell me what to do, I will do anything.
He has repented.
He has repented.
Thank you so much, Akas.
You know, just tell me, yes. So sometimes after you have tried everything and you have seen that it's not working, some people will give up. Some people will give up. Some people stop trading entirely. Yes, and it's not. It's trade. It's just that it's electronic. If you want to be trading Euro USD physically, you can, but it's more stressful and doesn't make any sense. CFDs are there. Okay, so yes, I'm just saying that so that I will tell you the aim. If that's the only thing you are going to get from this workshop, let it be that you understand that money cannot be made overnight as a trader. It doesn't happen in any business anywhere. Even if you want to make a lot of money, you need a lot of time. So you can't cheat it. Can't have one for the other. Okay, I believe that's very clear. Okay, yesterday I introduced you to bread from heaven. And I'm obliged to go through my slide. So I will quickly do that, and then we go back to the chart and look for bread from heaven signals. Now, see, I saw you going over what we did yesterday. It's very simple. That's why it is very simple. Strategy is saying, don't cram it. MACD, if it's positive, or if the histogram slope is rising. See what I mean? Sometimes you just need to look at, you have MACD as histograms, like this. The way the chart is moving, right, it continues to move with it, depending on the trend, right? If you have a downtrend, you have a lot of it down here, right? So what we are saying is, the histogram, either you check the slope of the histogram, or you just look at whether, if you look at that MACD very well, you see 0.0 here. And then you see, I don't know, I think it's 100, something like that. Just extremes. So this is the origin. So from the origin, it is negative. It means that you are only interested in selling. That's what the setup says. So now we are using the same thing on two charts. The same thing you are looking out for here, the same thing you're looking out for on the other chart. But you take your entry on the smaller time frame. See, the concept is very easy. You are spotting, when you open this chart and put in the MACD and the moving averages, you are only looking for the direction of the trend. So when you now have the direction of the trend can be gotten by saying, okay, the faster moving average, which is 20, is up. And then the slower one, which is 50, is down, right? Then MACD is positive. If 20 is up, let's go to the chart real quick. If 20 is up, and MACD is up. Okay, let's start from here. Sorry, dear. And adjust this side. What? Come out of this side. If you can't see. Okay. I'll make this bigger. So this is going to be.
Can I ask a question?
Yes, please.
In that Monday,
Yeah.
there's no number like someone that said 12, 26.
Yeah, it's programmed like that. That's where MACD is designed. It uses is moving average convergence and divergence. So the moving average that is plotted inside of MACD, that is causing all this, is automatically set that way. So if you change this and you don't change your other one correctly, you scatter the MACD. You understand? That's the way it's programmed. Yeah, so don't change it. The only thing I change is the color for visual aid. That's all. Okay, so I think I have 20 here. I have 20 already, so I'll add okay, so because I want you to understand this. If most indicator following systems are usually a bit easier for beginners. All right, then I'll still show you something else that you can use to trade. I'll change this to trade. Okay. Okay, I'm going to send this. This is a calculator that is designed that you can use to calculate your risk for those of you using computers. So I'll give that software to you. You install it into your MT4. So it knows your balance. So your balance is there automatically. The only thing you just need to do here is you can bring out horizontal lines from here and then drag it to where your entry should be and where your exit should be. So it will calculate the skips automatically and display the lot size you should use here. So you set your risk and every other thing there. Is that okay? Yes. So I mean, we can't do everything in one day. So you get all these things as we make progress. Okay, well I'm going to show you down here. Okay, so this is MACD. See what I'm talking about here is, let me say this so that I can have it on two screens at the same time. So this is the advantage for those of you using computer. Okay, you can save this template. I'll save this template as then I can use that template here. Okay, so then okay. So you can see that I have my trend screen and my correction screen at the same time. Okay, so if this is H4, it means that this should be H1, right? It should be H1. Now see what we're saying. If you come to the H4 screen, you want to make sure that if you want to buy, this is a buy scenario. If you want to buy, around here, MACD is positive. This is a buy, is it not? It's obvious. Because the red is above, that's 20 MA, 50 is below, and MACD is here. This is a strong buy. That's what it is. Now, when you go to your chart, okay, when you go to your chart, this is H4, this is H1. This is what you want to see. But the trend, the market is already going. So you're not going to trade here now. See, if you were there in the morning, because these are our early candles, right? So you have starting from 10 last night. Okay, so you have 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is 10 something. So this is 11 o'clock candle for me. Is that okay? So the point is, around here, okay, so I want you to look at this line where the cursor is there. around here, if you come to this chart around this time, you know that it's a buy, is it not? You know it's a buy. Because there are several things that can happen. Right now, as we have opened this chart, we are late. Because this trade has already gone to target. Is that okay? It has gone to target. So, but what we are looking for is, we want to come around this area when it's close to the moving average. Do you get the point now? So we want to make sure on the entry, during the pullback, we get a signal that tells us to buy close to the moving average. So from the moving average, either you're taking this first one, you have this right here. Just follow the cursor, right? You have the first time the market came too close to the M, it was here. Already, we have already established that the market GBP USD on H4, which is the trend screen, is buy. So it's either when we go to the smaller time frame, it's either we are waiting or we are buying. Is that okay? And for us to buy, we need a pullback to the moving average. Is that okay? So right now, where we are, this is not a pullback to the moving average. So we have to wait. As long as this screen remains a buy, anytime this market pulls back to this red line or the blue line and provides a signal bar, something like this guy, something like, okay, this is not even on the line, this is not the line, right? We want it to be on the line. Okay, so when it gets to the line, you can see the black bar here is quite small, right? Close to the line. And then when it got to the line, it was rejected. At some point, this was full black, right? At some point, this thing was going down, it was black. But when it got to the red line, it was rejected and then it went up. So you put your entry at about one tick above this. Do you get what I'm saying? Okay, I'll take it again. Already you have established that the trend is up. This is very simple. MACD must be positive. And then moving average must be above, like this. You want it like this. It's a trend following system. Right? So we have established the trend. Now we are looking for entry. And we don't want to enter when the price is high. Some people entered here, some people bought here. You can see some people bought here. They would have waited all the way since yesterday till now before they are seeing some profit. And they're just seeing just little profit compared to those that would have entered around days. You get the idea. So what we are saying is, right now, is it okay to buy? No. It's not, because it's like buying, yes, it's like buying it expensive. The point here is to buy at a discount. You get? It's to buy at a discount. So it's not every time you open your chart. I told you yesterday there are three things that can happen. After you establish your trade, if you open this one, you can see the MA is scattered. And then MACD also scattered. But if this scenario is possible, because you can see something that worked, right? If you were on this chart here, you would have taken the entry because the setup is correct. This is above, this is below, and this is positive. Setup is clean. You get what I'm saying now? So this is good for your entry.
So, but this bar after that initial candle,
Yeah.
that's somewhere around. Is it enough to serve as our shape like this?
Yeah, look here now. You have, if you miss the first, this was the first entry. Am I right?
Yes.
That's the legitimate first entry. And then your stop will be below here around, right? And then your entry will be one tick above this place. I mean, this is the bar I would have taken you into the trade. Is that okay?
Yeah.
You know what I mean, right? See, if I have my entry order to be here, is this bar that will trigger my order? You get what I'm saying now? So the trade will still be open until this bar got to this high. Trigger this entry, then there was a slight pullback, and then now the market is going to target. So if you missed this particular entry, you can take, there's an indecision bar here. And immediately after the indecision bar, what you want to see is who won. This is a clear indecision bar. Who won after this indecision bar? Is the bulls. right? And then it verifies or it confirms it validates your bias. Yes, for a buy. So you can make your first profit from this trade. You have your stop at the base of this signal bar, and then you have an entry somewhere here. If you miss this particular entry, you can have another entry just right here, around there, right? And then your stop below, around here. Okay, for the first one, it should be around there, right? Somewhere around here. For the first one. And then for the second one, just one tick below is enough.
Below the incision bar or the
Below the swing, just anything that gives you the low around that area. Okay, and then your target should be twice the height of this stop loss. Whether you use this first one or you use the second one, you will still get to target. And what is driving this 1 hour is this move.
The 4 hours.
Yes, it's the 4 hours. The only thing you did on the 1 hour is to wait for a low price. Then because this is having a buy bias, we know that in the next couple of hours or days, this market will still be buying. So what you come to the lower time frame to do is to look for an entry. I believe this is a very clear, yeah, that's what we do. So for now, we can start with this strategy. You can develop your own strategy, it's very okay. You can develop your own strategy. If you use this, I guarantee you that you will make money. You will make money. If you use this, you're going to make money. So, but if I don't use this, it means that there's something better than this, right? And here, that's what we keep learning. So as you're learning, you are improving your skills. But the mistake people now make is when they start to think that they must be correct at every point in time. That's the problem. Yeah, you want to say something?
Yes. I have this kind of scenario.
Just give me the market. Let's open it here. Okay.
AUD USD.
AUD USD, what time frame?
30 minutes.
AUD USD 30 minutes. Okay, so we are going to also have AUD USD. Yeah. So when you look at your correction screen, it's not a must that immediately you are there, you are going to take a trade. It's either the trade has taken off already, or the trade is about to get to is moving towards the moving average, or it's there, it's right there in front of you. Okay, those are the three things that are possible. So, and then what you need to do is put alarms. You can put an alarm around the moving average. If let's say this is the screen we're waiting for, and we're hoping for this market to come down, right? We just put an alarm around this price, around the moving average. So if the market eventually gets to the red line, you know that it's now giving you a discount. I'm not talking about this chart now or this case. I'm just doing it as an example. If the market was, maybe the market was here, and you want it to come to this red line, you can put what's it called, and around the red line you can put an alarm. So when it comes to this red line, the alarm will ring. So you confirm that this is still a buy, and then your alarm has run for a discount. So what do? You wait for a signal bar. This is a signal bar, and this market is not going to go below this low unless it reaches twice the height of this bar.
That's broken
Because
down.
these guys here that defended this thing and gave you this bullish bar, they will stand to defend this price level. See, they did it here. Do you see that? They will defend it. And when they will give up is when this thing has reached twice the target, twice the height of this bar to the upside.
So it has created another support and resistance level.
Yes.
It has broken that point
Yes.
and created another.
Exactly. You see, so this market is ranging, right? But what I'm trying to tell you is, if there is a fight and these bulls came in and gave us a follow through, they are not supposed to allow this level. Is that okay? They are not. And then you can see them doing that. The moment the market came here, it was spread, it was approaching this level, they sold, they bought again to raise that level. Is that okay?
Yes.
Yes. And there are deeper things that you can learn or that you still need to learn to make trading decisions. But based on what we are doing, this is what is obtainable. Is that okay? Yeah. Okay. Now this is this particular setup. Okay. So this is a buy, right? This is positive. Red has gone above. Okay. So we are looking for a buy. That's what we're looking for here. Okay. Now we come to this particular time frame. The first time around when the market got to this place was here. All right. So traders put their stop below here, and then their entry is one tick above the signal bar, what you call Marubuzu or shape bar. Okay, what you call Marubuzu or shape bar right here. Okay, and then this one triggered the trade. And now traders are in a loss, right? Traders are in a loss. Okay, and then they are looking at it. That's the point I'm trying to make. But there are times when you don't take the stop, it will go and it will exceed the target. Okay, so that's the point I'm trying to make, guys. All right, so keep an eye on AUD USD. For those that entered this trade, for those that didn't enter the trade, you can still place a pending order here, assuming, these guys still defended that level. I expect them to defend the level
So
actually.
at what point
So,
do you, since you said you shouldn't enter market execution,
yeah.
so we depending on that, at what point do you now start?
So if okay, you can take this order right now. All right, let's go. Take the order. AUD USD. AUD USD. So but if you take an order and the market has come beyond this point, it has invalidated it. Okay, is that okay? You have to wait for another setup, maybe around this 50. Is that okay? So if this one doesn't work, you wait for another signal bar like this around 50. And then as long as this has not gone to the negative side, it's still valid for a buy. Okay, so what we're buying is MACD is positive, but this is pulling back. So once MACD goes down, MACD shows you the direction of the trend. So if MACD now becomes negative, it means that the trend has changed to its sell trend.
So I was trying to
And then this thing would also flip. Yes.
If you're working with the trend screen of say 1 hour to 15 minutes.
Yes.
At what point, let me say, once you see this candle,
Yeah.
longer, at what point do you now start a pressing of calculator to calculate?
No, immediately this candle shows up, you start doing your calculation.
So that one can
see this is 5 minutes. This is 5 minutes.
I'm talking 15 minutes.
Yes, but 15 minutes will be slower. And then if you have a case where you cannot deal with the calculation in 5 minutes time frame, you adjust. If you're using a weekly, if you're doing weekly here, you do daily here. Is that okay? If it is a weekly time frame, it's a daily time frame. It will take a whole day for the next candle to form. If you're doing daily, you do H4.
But do we wait for that shape back?
No, close, of course.
Or we now start
You got to wait because there are times where this candle forming now can remain black throughout, but it will close as a white bar. It's possible because the market will always go the wrong direction first before it's to the last quarter. That's the last. If it's a 1 hour bar, the last 15 minutes of that bar. That's when you start to see the real color.
So in 15 minutes, we can wait till the last 5 minutes now.
No, don't wait. Wait for it to close. It's the closing price that determines who won. So you have to wait for it to close. If you cannot wait for it to close, then change the time frame. Not you don't use that particular time frame, so that your target will be based on the time frame where you're operating.
But before you can finish pressing the calculator and press and putting the pen in order, would it take you much higher?
If you have spent a long time, using your calculator will be very easy. If you are spending a long time, it's because you are still practicing, you are still learning. So 5 minutes might be too fast for you. 5 minutes might be too fast for you. Okay, guys.
I noticed that from that started from writing what's the difference now?
It's what you do is buy stock. Market is gone, right? So we now wait for maybe something else around here. Okay, so we wait for, if this one is taken out, we wait for another setup here. But I just want you to understand that this is a very valid setup according to the strategy. This is very valid. Once this is positive, this is going like this, it's an uptrend. Okay, if some traders on some time frame will have made money on this trade. Okay, so
sorry, sir.
I am happy that you are seeing a losing trade, so that you know that whenever you are placing this trade, you manage your risk. It's very important. When you're doing TA, you manage your risk. Even the strategies I use today, there are some days when you don't make money, right? So, but you are not losing much. You are losing 0.75. You're losing 0.5. The trade has to be very good for me to take a 1%. It has to be very good. And when I say very good, there are lots of things that are confirming the trade, including fundamentals, including the situation of the, the report and every other thing. So to take as much as 1% of the capital, it means that this is your best or favorite setup, right? But if you're using TA normally, you don't exceed 2%. Don't exceed 2%. It's very important.
Sir, if on the EMA 20, maybe it failed, like in this, maybe because it has already finished failing in this one. Maybe it failed in this one. But on the 50 now, we now see a good setup. Like
Yes, That's the idea. People who trade here, they make about 16%, 20% in a year. But people who trade on this market can make as much as 20% in a month. You get the difference now. And it's obvious, right? It's liquid, it's volatile, can make money. There are lots of advantages. Okay, the commissions are small. There are many traders, commissions are small, the spread is low.